Advanced Micro Devices Inc., ticker symbol AMD, is down 7.5% after hours to $153.73 a share. That is because they have just released their Q3 earnings for 2024, and the market hasn't really liked what they've seen. A little bit uninteresting. What we're going to be doing is going through these numbers, then taking it to my automated stock valuation spreadsheet to see if it is a buy on these updated numbers using the discounted free cash flow model, comparable company model, the Ben Graham formula for intrinsic value. So let's get straight into it. Here we have the 3 months ended and the 9 months ended, 23 and 24, and we can see revenue is up from 5.8 billion to 6.8. And we can see also in the 9 months, 16.3 to 8.1. So that is looking promising. Cost of sales is slightly up. And if we scroll down here to eventually the net income is up 265 million to 771. And on the 9 months ended, 187 million to 1.1 billion. So it is up. Revenue is up and profit is up. So overall, not too bad. Next, we want to look at the free cash flow. Free cash flow is cash from operating activities minus capital expenditures, which will be slightly further down. We have the, let me just type in free cash flow. Free cash flow. There you go. So we do have the CapEx down slightly, 154 to 132. In the 9 months, it is up. And if we look at the operating cash flow as before, we can see free cash flow is about 500 million, up from 460. So if we look at those, it is overall okay. But as we can see, market is down 7%, 8%, probably expecting crazy revenue growth of 20%. That's probably why. But let's put these numbers in our sheet and see what we can see. So actually, what we'll do first is you put in ticker AMD. This will load up all the latest company financials and we can have a deeper look. And what I'll do is we will wait for this to load. Now ignore these numbers here as I've just done a video on Google, so we can manually override these numbers so we can see with the latest. So this is the trailing 12 months currently, 23.5, 1.1 and 1.4. And I believe the revenue was 6.8. So you can see that is actually up slightly. Trailing 12 months is up. That is good. Net income 700 and up again 1.8. Free cash flow was 496. Up as well. See, now it looks pretty good to me. Anyway, $166 a share, market cap of 270, PE of 200 with a market average of around about 30. That is a little bit high. 83 cents a share and a beta of 0.7, meaning it's a lot more volatile. Analysts still think it's a buy, $188 a share. So let's look into revenues. All-time high revenues in the trailing 12 months, 20.58. You can see it is growing now. Yes, slowed off in the last couple of years, but all-time highs. Next, we're looking at net income. Not all-time highs, 1.8 billion, but higher than 23 and 22, so trend in the right direction. Free cash flow, 1.156 billion. Once again, similar story to net income, down from 21, 22, but up. Now, obviously, if we do look at the CapEx has increased. Operating activities, operating cash flow, is down, so that's a bit of a negative. Shares outstanding, there's been some splits, but you can see they are slowly issuing more shares, which means they're diluting shareholders, but as long as they reinvest the money, that's all that matters. So let's get into the discounted free cash flow model. This is a way of valuing stocks, looking at the future free cash flows and discounting them into today's value. This is looking at averages, and it does give us a calculated stock price of $40 a share, which is a bit on the low side compared to what it is. So let's have a look at, we're expecting 22 and 32 billion. Let's see if analysts agree with us. And yeah, probably fair. We do agree in the same thing. Now 33% per annum over the next 5 years. That's much higher. Net income margins I agree with on this. So I'd say discounted free cash flow is probably fair, but you can see with this free cash flow ratio currently of 83 and an average of the last 5 years of 260, discounted free cash flow is never going to like the stock. Before I continue, please check my Patreon and links and subscriptions. Like and subscribe if you're interested. We'll do the Ben Graham formula for intrinsic value next. This looks at earnings per share, AAA bond yield, corporate bond yield, and the PE of a non-growth company. And current bond yield is 4.86%. As we know, very high inflationary environment at the minute, though, is coming down. And I believe we saw 33%. So $33 a share, still down. That is quite big, actually. Similar numbers to the discounted free cash flow model, $40 to $30 a share. Okay, so finally, we'll now look at the comparable company model. This is a way of valuing companies, looking at similar companies of similar industries and sizes. And what we'll do for AMD is we will compare to, I want to compare to NVIDIA directly because they are sort of kind of someone they are compared to, but more similar companies I would say is Qualcomm, ticker symbol QCOM, as I said, Texas Instruments, TSXN, and we'll go with Micron, MU. So what this will do is it'll load up all the latest company financials for all of these companies, and then we can have a look at comparing the metrics such as revenue, profit margin, price to sales, price to book PEG, EV to revenue, EV to EBITDA, PE, and forward PE. So enterprise value, AMD is the largest, revenue third largest, but revenue growth rate is the highest, 26%. Obviously, they haven't been growing that in the most recent years, but the last 5 years, obviously a lot higher. Third most profitable, 1.8 billion. Moderate profit margins, but much lower than Qualcomm and Texas, but higher than Micron. PEG is not loading, sorry, for Texas Instruments for some reason. Price to sales, 5 is about average. It is the highest. Price to book, highest as well. PEG seemingly underrated, 0.42 is because of the high earnings growth. EV to revenue, EV to EBITDA, PE, and forward PE. PE, very high, doesn't like that. Forward PE, surprisingly, doesn't like it either. Really rates it at about $102 a share. So not a buy according to the comparable company model. So none of these models are in agreement. And what we'll do finally, actually, if I put in NVIDIA, and we'll compare it to them directly just using this sheet. This will just compare NVIDIA versus AMD. They're obviously not like for like, but this will put it at $195 a share. This is because the EV to revenue, EV to EBITDA not so much, but the PE as well. So obviously a lot bigger company, 3.4 trillion compared to 258 billion. But if we go back to AMD, yep, so still down about 7.5% after hours. If we were to compare for the last 5 years and just compare this against the market. Now, yes, I've probably consistently said on the models that this isn't a buy, but up 376% compared to the market's 90 over the last 5 years, up 72% in the last year, and year to date market's beating it, but in every other horizon, the AMD has considerably beat the S&P 500. Right, guys, thanks for watching. Please give a like on the video. Check out my Patreon if you're interested. Subscribe, and I'll catch you guys next time.